Yeah. Well, great to be with you, Sarah. Another challenging day. After a really good day yesterday, we continue to think we have this very complex global backdrop and that, it makes sense to continue to be up in quality and defensive. But I will say, really, on more of a short-term perspective, we're actually getting a little bit more positive short-term. And even today, I know it looks ugly today, but we're watching a couple of kind of small positive divergences. Yes, Apple's down a lot. Utilities are down, and towards the end of at least a market decline, you bring down the winners as well, and we're seeing that today. And then you're seeing, like as you mentioned, energy, a little bit of a bid there as well. And most of our technical indicators are the most stretched to the downside that we've seen since the mid-June lows, and also before the pandemic lows. So again, I want to be clear: we don't think this is time to be an offense. We thought, when the market was closer to 42, 4,300, we were recommending to reduce risk. But we're down 15% off those August highs. We don't think this is the time to press to the downside, at least not short term.
So, but everything you're mentioning is sort of technical or positioning or sentiment related. So you think we're due for a short-term bounce here? Nothing fundamentally has changed as far as the inflation and central bank and global economic environment, has it? I mean, is that what it's going to take to really find a bottom?
Yeah, well, part of the market is it's all about where things are relative to expectations, and we just think on a short-term basis that things are getting a little bit one-sided here. And again, I mean, the negativity is pretty wide. But you're right. Fundamentally, I mean, the global economy is weakening. We think it's going to continue to weaken into next year. I mean, we have not only supersized rate hikes in the U.S., but we have the tightest global central bank policy that we've seen in decades as well. So yes, I think overall, that the fundamentals are still relatively weak. The global economy is still relatively weak. But again, markets don't move in a straight line, and we are in a more tactical environment. So therefore, again, I mean, at this point, we would be a little bit less, defensive or pushing against them when we've just gone down 15%.